Bitcoin dips into the zone that has built millionaires. The 14-week moving average is holding again. Every previous cycle bounced right from here. Every panic sale funded somebody else's breakout. Conviction pays, panic pays someone else. The weighted moving average is a glowing gold line as it catches the shorts off guard. And things are shifting because there's an important evolution that we're going to cover in this video today. So you're going to want to make sure you get your number 2 pencil out. If you're into just short type of videos, go to TikTok or go to InstaTrash. Welcome back, Crypto Crew. It's your boy Tom. You're going to be breaking down the hottest in Bitcoin and crypto action. Make sure you give us a like. Make sure you hit subscribe. And if you have not already, make sure you follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're crypto maniacs. And I am stoked today. I am stoked because there is an important evolution that's happening. It's the composition of leverage that in this market has matured. And I'm going to bring the facts. I'm going to bring the receipts, okay? Now, it's not just retail traders chasing pumps anymore. Institutional, miners, and ETF market makers now dominate the flow, moving activity toward regulated venues like the Chicago Mercantile Exchange, where longer dated and hedging oriented contracts control the rhythm of the marketplace. Leverage today, ladies and gentlemen, it's engineered, it's structured, it's collateralized, it's often used to hedge inventory or an arbitrage basis. Bitcoin has matured. The crypto market has matured. Things have definitely changed. And it means one thing: Bitcoin's leverage has evolved from casino fuel into capital structure. That's why this pullback might not be the panic and everyone thinks it is. It could be the foundation for Bitcoin's next institutional leg higher. So now the question that we have is, will there be a final shakeout before the next big leg towards 130,000? Okay, and we're going to actually break that all down for you. All right, let's get into the short term before we get into the long term. I'm telling you, you're going to want to get your number 2 pencil out. All right, we're going to make you the smartest traders at the pub, at the bar, at the dinner table. Nobody's going to be able to beat you. Nobody, because we're going to come with the receipts. All right, let's get into it. Short-term Bitcoin, 2-hour chart, our famous little 2-hour chart. Where is it? That's my M2. I don't want my M2 right now. Hey, I'm so stoked. I am so stoked right now. You don't believe the show I got for you today. It's going to be simply awesome. All right, so here we are. We finally broke out of the top of the box. All right, we said that should be support right now at 112.8. That should still hold. Okay, we came down to a pretty critical price short term, 113.4. Because I was really thinking that 113 was the line, and it still is for me. Short term line is like 113.4. If it breaks that, I do believe we're going to drift back down to 112.9. It's not much of a difference, but as a short-term trader, hey, if I found that money in front of my bed, I'd pick it up, right? So I'd be looking at that. But here, Bitcoin itself is starting to like coil, consolidate, kind of like Ethereum, but Bitcoin's really now the star of the show because of Bitcoin dominance. But right now, what we have is the resistance right now sitting at this 116.4. All right, so support sits right now at like 112.8. Minor support right here at 113. Okay, so like I said, there's not much of a difference, right? But if you notice, when we popped down to this low, there were buyers, and there's still buyers sitting down here. We talked about this yesterday. We said that it looks like the institutional guys, the big boys, like sold. Now, it wasn't like euphoric, they weren't selling into retail euphoria. Actually, they were selling. They knocked the price down. They were probably trying to get the price back, try to get their coin back at 112.8, 111.5, something like that. Now, remember, They're not going to let this run away from them. Okay, so if if this marketplace breaks up through this top right here, of the 116.4, we could be looking at a quick run towards like the 118. Okay, there's still going to be resistance up here. It's not going to be easy. So we got two levels of resistance right here, the top of this box, which we touched. We came down. We didn't get really that much of a deep retracement. So that's actually good to showing that short-term Bitcoin's got the ability to start to rally. Now, if I show you the chart that I was just pointing to right here, okay, the WMA 14 aligns with previous cycle bases, 2019, 2021, 2023. Note how institutional liquidity behavior is starting, like there's going to be large bids resting under the 14 WMA. Quiet accumulation zones. That's why I said in the opening that this was the zone that built millionaires. As the weighted moving average 14 is holding again, every previous cycle has bounced from here. Every panic self-funded somebody else's breakout. Conviction pays, panic pays somebody else. All right. Now, macro framing that we have to look at. We're heading into Fed week. October 29th, rate decision day. Markets are pricing in a 25 basis point cut. Historically, Bitcoin's strongest weeks came right after policy pivots. So, when liquidity expands, risk assets breathe and Bitcoin inhales first. So if we're looking at the most obvious, when we're looking at, money itself, M2, right? Most obviously, Bitcoin's been lagging. Global liquidity has broken out and it's getting larger. Now, it's really interesting because there was I was looking at some analysts that were talking about like the Asia market versus like the European market. And like the Asia market was contracting a bit because of some policy constraints there, like as they're trying to defend their fiat currencies. So really like contractions happen during Asia because of their liquidity structure. But when we get the Fed, now we got to watch that skunk Powell, right? Because you never know with this guy. But really, the market's pricing in a rate cut. So that's actually making Bitcoin breathe a bit now. So liquidity has broken out. Gold instantly responded. And we talked about that. I'm going to get into that really deep. So look, today's going to be a bit of a longer video because I'm really digging in here. Okay, I'm really digging in. I'm going to be showing you why we show you the charts that we show you. Because I had an interesting conversation in the cigar shop. Somebody said, "Yeah, I watched your video. Why do you keep showing me this M2? Why do you keep showing me gold? Why do you keep showing me?" So I said, "You know what? Won't be a bad thing to actually go over why we actually do it, because there's a rhyme and reason for it." Okay, like one of our channel viewers said, we're not just into Fibonacci. Fibonacci is important for short-term trading, yes, but really macroly, it's really important to understand like the whole playing field of Bitcoin. So Bitcoin is stayed quiet for the time being, but it's not going to stay quiet for long. Delayed doesn't mean denied, and the catch-up rally is going to be brutal. So now let's really talk about what drives these shakeouts. All right. Now, this is where we're going to get into the woods. I'm going to show you this. This is Bitcoin futures. Okay. If we obviously know in October this month, futures leverage, right, was really sitting at the highest point. It was sitting at above the 95 percentile, with cash collateral backing Bitcoin futures hitting a record high of 145 billion. Open interest peaked at 52 billion on October 6th before collapsing down to this level, collapsing down to 39 billion. Okay, just a total of 4 days later after an 8-hour 20% Bitcoin drawdown. It was a total textbook margin cascade, one liquidation triggering another, and then another, like dominoes falling through over leveraged books. Now, the thing was, it was the exchanges that didn't have enough players. So they just closed everybody. Unbelievable. They're just like, all right, you're making money, you're out. You're losing money, you're definitely out. We're just going to close you down. All right, so that's part of the game. We can't hate the game. That's part of the rules. We can't control the rules. But it's the same movie we've seen time and time again. When leverage gets bloated over 90%, if you look, here's the 95 percentile. Look at every correction that we've had. Every correction, okay? Now look at this. Market was driven right down to March 25 levels. Right here. Perfect. And now we're getting a recovery. Awesome. Okay, great. But now, every time leverage gets bloated above the 90th percentile, something breaks. That's what happens. Because historically, leverage has never stayed above 30% for longer than 75 days. Don't believe me? Go back and look at it. Which tells you that there's a natural limit to risk appetite. All right? As of mid-October, we reset to the 61st percentile, right back in what the pros call the accumulation comfort zone. That's right. That's why I'm telling you that's why we're saying Bitcoin's going up. Everybody, oh, Tom, you're nuts. It's going down. It's crashing. It's over. The party's over. Nothing's over. I'm telling you, nothing's over. Now look, here is probably one of the most important parts of this evolution that my fellow crypto, I don't know, I don't think I call myself an influencer. I'm a trader. So, but the fellow talking heads will not mention. The composition of the leverage has matured. What are you talking about? What do you mean what do you mean it's matured? Well, it's matured. Okay, it's no longer 22-year-old guys and gals sitting in the basement with hoodies on, trying to make their next million in Bitcoin. No, sorry, us old dudes entered the game now. I'm sorry to say it's no longer a young man's game anymore. Okay, it's the old goats that are coming back in. And the old goats being like the institutional players, okay? Because institutions, miners, and ETF makers now dominate the flow. BlackRock, okay, IBIT. But State Street, you got all the big players are now dominating the flow. They're shifting activity towards regulated venues like the CME, where longer dated hedging orientated contracts rule the tape. The tape is the price for those of you, it was an old tape. Forget it. Anyway, ticket tape machine. But anyway, leverage isn't just gamblers chasing pumps anymore. It's structured, it's collateralized, and it's often used to hedge inventory or arbitrage basis. Yes, arbitrage basis. Okay, that means one thing. Bitcoin's leverage is evolving from casino fuel into capital structure. I'll say it again. Bitcoin's leverage is evolving from casino fuel into capital structure. Yes, it can definitely amplify drawdowns, but it's also a sign of growing confidence in Bitcoin as a financial asset class. And this is what we've been saying all along. This was the argument where I was saying this thing is not going to crash. There are too many people, too many big boys involved in it. So we're getting into the point of it's getting too big to fail. That's what's happening. Now, let's zoom out and let's talk about what really drives the overall big picture and what it is. What is it? It's global liquidity cycles. Okay, now Bitcoin's price has been tethered to the ebb and flow of global money supply. The tide of M2 liquidity is sloshing through the financial system right now. Since 2014, Bitcoin has showed a 0.5 correlation with global M2 growth, which basically means, and I hate to say it, it rhymes with how much fiat currency is being printed or withdrawn from the system. Now, there's something, if you look at what's known as the coefficient of determination. All right, now I'm getting into, my hedge fund days. The coefficient of determination, also known as R squared. It sits right about 0.25. So R squared sits at 0.25. What does it mean? It's just a fancy way of saying that roughly 25% of Bitcoin's long-term movement can be statistically explained by global money supply. The other 75% is pure Bitcoin DNA, adoption, halving, cycles, sentiment, market structure, all that stuff. Now, now I'm getting crazy now. Now I'm getting excited. Okay, now look, I showed you this chart, right? We talked about the COVID crash, tariff crash yesterday, all right? During short-lived shocks like the COVID crash in 2020, the 2024 U.S. election also, or the tariff tantrum of this month, right? The correlation temporarily breaks down. But over the long run, money supply expansion always reasserts itself as the dominant macro force. Now, here's where it gets really interesting. If you're going to use a multivariable regression, basically a statistical model comparing the top 5 fiat currencies, M2 levels, against Bitcoin, the price shows that over half of Bitcoin's variance, R2 squared, is 0.54 over the past decade. And it can all be explained by liquidity growth. That's enormous. It tells you that Bitcoin trades on liquidity, not headlines. I'm going to say it again. Bitcoin trades on liquidity, not headlines. I had to whisper it just to make sure. I do a little bit of cognitive like a pattern interrupt there to make sure you're listening. So since 2013, okay, global liquidity has done what? It's doubled from roughly 50 trillion to nearly 100 trillion. Over that stretch, Bitcoin's price has risen more than 700 times. Yes, Bitcoin's price has risen more than 700x. Now, among individual currencies, if we want to get really dirty into the nitty-gritty, the Euro M2 money supply has the strongest connection, with a correlation of about 0.69 and a T-stat of 10 for those stat nerds out there, underscoring Bitcoin's evolution into a natural reserve asset in an era where all fiat currencies are debasing together. Oh my goodness. And you want to be short Bitcoin? Are you kidding? I don't care if this thing goes to 40,000. It would be the gift of the century. And of course, it's not going there. But my goodness, people, come on. So if you're wondering why Bitcoin keeps coming back every cycle, it's not, it's not magic. It's not abracadabra, presto changeo. No, it's math. When liquidity expands, Bitcoin breathes. In other words, they often rhyme, but they don't move lockstep. So I'm sorry about the rhyme thing again, but it's the only way you could say it. So really, Bitcoin has been the obvious lagger on the charts, right? And I'm going to get into that in a second. But right now, we're looking at global liquidity has broken out, right? Gold responded instantly. Bitcoin stayed quiet, but it's not going to stay quiet for long. Delayed doesn't mean denied. The catch-up is going to be brutal. Now, I want to go to Bitcoin versus gold. That's where I want to go. All right, right here. Where's my Bitcoin versus gold? There it is, Bitcoin versus gold. Why do we keep showing you these gold charts? Why do we keep saying that there's a 108-day lag? Why do we keep talking about that stuff? Because if we put the Bitcoin against the gold ratio, against the backdrop of this month's deleveraging and Bitcoin's price to gold ratio, we could see that it sunk to the lowest level since October of 2024. Now, for you cycle guys out there, 1 year anniversary type of people, people following moon phases. I mean, it's just amazing. Now, I'm not that trader. I don't look at that, but it's just amazing that it actually came right back down to the level it was 1 year ago. That is insanity. And also, if you look at it, we got a beautiful Wyckoff spring right there. I mean, slight dip below and then a Wyckoff spring. Awesome, right? But anyway, if we're looking at this, it sunk to its lowest level since October 24. And what we're seeing now, frankly, was and is a buying opportunity. It's the kind that only appears when the crowd is licking its wounds. Yep. It's a buying opportunity because the crowd is licking its wounds. Majority of people are like just shell shocked, and they're still shell shocked. You gotta love it. You gotta love it. I mean, it's just insanity. But it's this chart has showed the relative undervaluation. It's now again, this is the zone where conviction pays, not panic. Every previous deleveraging cycle marked the foundation for the next leg higher. That's our point of view. So we showed you this Bitcoin versus gold chart, and that's the reason. Look, if you're looking at this is the gold, this is Bitcoin gold ratio, right? Now we're going to take you, this is the chart that we've been showing you. Because we said that when gold finishes, Bitcoin takes over, right? 2017, gold stalled, Bitcoin exploded. 2020, gold top, Bitcoin soared. 2025, gold is starting to slightly stall, hasn't come off yet, really, but you know what comes next. Bitcoin's going to take off. Bitcoin is the release valve. So you got to front run the capital. You got to front run the shift. You got to be early, not reactive. Now, I wanted to put, Frank actually went out and sold some physical silver recently because his point was, look, things are going to shift. So he got out of his silver position. He actually went and sold physical silver that he bought in like the $20 range, I believe. Sold it like $52. He sent me a picture. I didn't really know how to put the picture in here. So, but anyway, his point was, look, things are rotating. So he wanted to get ahead of it. He's like, I'm going to dump some of my physical silver. Cool, good move, right? Now, we also said, and we showed you this chart right here, the correlation between gold and Bitcoin. 180-day lag, it's not a coincidence. Gold already exploded. We said Bitcoin was next. Every time that plays out, the result's the same. Massive catch-up rally. And we said, are you positioned? So we know that gold has breached resistance. Bitcoin's going to totally obliterate it. Because, look, we told you yesterday, we talked about Basel III. We talked about how gold is actually being taken out and putting into reserves, right? Balance sheet reserves for banks, all right? There is only one thing left for banks to do, and that's to get into Bitcoin. Add it to their balance sheet. So Bitcoin, when it explodes, is going to make the gold rally look like, I don't know, I can't even think of an analogy for it. It's just going to obliterate the gold rally. It's just going to really obliterate it. So we know that the wedge doesn't last forever. This one ends in a breakout that's going to define the cycle. And when it detonates, you're going to witness the birth of the Bitcoin super cycle. And that's what I got to say to that. I'm sorry it took so long on it. Now we're going to get into Ethereum. All right, let's get into Ethereum. As it stands right now, we're looking at Ethereum's coiling right around 4,100. Okay, every compression at this level since mid-23, like if you look at compressions, since mid-2023 has led to a 25 to 30% expansion. And Ethereum isn't weak. It's very patient. Smart money builds positions when the volatility dries up, and that's exactly what's occurring. So we're looking at Ethereum is coiling for history. It's a textbook pennant on the monthly. It's not speculation. It's precision. Smart money sees it. Unfortunately, retail is going to chase it. What happened to my pennant? It disappeared. Guys keep like coming in on my charts, man. But anyway, smart money is going to see it. Retail is going to chase it, unfortunately. So this is the price, action that is screaming for liftoff. Now, this was the chart that made some people a lot of money in our trading room. We talked about the triple bottom in Ethereum. It was confirmed. Bulls weren't giving up the level. All eyes are now on the breakout. We got to watch the 4,200, 42, 4,300 for the breakout like a hawk. We break that level, Ethereum's going to start to fly. Now, we also said Ethereum is also mirroring gold, right? So we're looking at Ethereum versus gold. Structure's identical. The momentum is building. Gold ran first, of course. Ethereum just got started. History is not going to repeat this time because Ethereum is going to go up to like $10,000. So that's what we're looking at in Ethereum itself. So now we're going to get on to altcoins. But before we do, Bitcoin dominance, right? That's the most important thing that we got to look at. Right now, we're looking at Bitcoin dominance. It's sitting at 59.74. So it's just, right now, Bitcoin is taking front and center. Now, what we can see right here with it, although it's still quite high, is that Bitcoin's tapping historical resistance once again. Every rejection sparked the same thing, a beginning of the altcoin liftoff. The setup is forming. This cycle's no different. It is what it is. All right. Before we wrap up, crew, want to make sure you're well aware of our crypto trading community. Completely free to join. Link is in the description. You come here, you click this link right there. You be taken over to our Telegram site. Like I said, completely free. Drop insane alpha trading opportunities every day there for you. Hey, if you want to go it alone, we got 2 excellent brokers that you can choose from, both offering incredibly insane bonuses for you. We got WeX, low fees, fast execution. We got BTCC, same thing, low fees, fast execution. It's like vanilla or chocolate. You got to pick your one. They're both really good brokers. Make sure that you level up. I would suggest just joining our Telegram trading community right there. Join the crew. It doesn't cost you anything. Level up your trading and let's stack the profits together. We got a lot of people making some good money in there. Of course, we don't win every trade, but we win more than we lose, and we'd be happy to see you in there. All right, let's get into it one more time, all right? And I want to show you something. I got something really cool to show you because I think if you followed my advice, so once Bitcoin stabilizes, we know that the rotation is going to come next. Liquidity never disappears, it migrates. Now, if we're looking, that's why I'm going to show you this. I love this because I think if you listen to all my advice, this video, you're going to be making some bank. There I am, right there, right there. There's your boy Tom right there, bringing you the hottest in Bitcoin and crypto action. Follow the advice, of course. Trade with your head not over it. But anyway, as we stand right now, we're looking at alteration coins to watch. Solana, HBAR, XRP are all testing structural bases right now. And we know that the altcoin market is brewing. Okay, it's starting to brew. Altcoins versus Bitcoin just hit a monthly support. RSI has kind of broke its downtrend. Price is coiling. Bitcoin dominance is not going to stay king forever. So every major altcoin rotation begins here, but they got to be good utility coins. If you want to make some of this, you got to come into our trading room and we're going to basically help you out. Pick the right utility coins, right? So once this chart starts screaming, alt season starts right here. All right, so what are we going to break up with? What are we going to finish up with? Right now, we're going to basically be talking about what? M2, expansion, geopolitical backdrop that we got going on with you got also Xi meeting with Trump. That's a good thing. If they come out and they're friends and they kiss and make up, Bitcoin's going to really take off. You got a link to the U.S. dollar index correlation. Weaker dollar from rate cuts often precedes Bitcoin rallies. Future open interest has reset. Hot money's gone. Only the quiet pros remain. That's when markets are most asymmetric. All right. So this is where the traders get separate from the tourists. The zone that built millionaires doesn't look like a gift. It looks like a little bit of pain here and there. But remember. Remember always respect the points that we got going for you. Come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day and every day. So what do you got to do? Well, you got to join our pro group. What else you got to do? Well, you got to trade with your head not over it. What else you got to do? You definitely have to do your own research. As you know, I am a trader, not a financial advisor. You got to stay calm. You got to stay sharp. Remember, always as a short-term trader, enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.